The Master Key of the Semiconductor World, a comprehensive guide to ASML. As of January 19, 2026, ASML Holding, ticker ASML, is often described as the most important company you've never seen. Based in Veldhoven, Netherlands, ASML doesn't make chips, it makes the machines that make the chips. For an investor in 2026, ASML is a monopoly play on the future of human intelligence. If a company wants to produce the world's most advanced processors for AI, smartphones, or supercomputers, they have no choice but to buy from ASML. This 1,500-word guide explores ASML's unique technology, its 2026 financial trajectory, and the geopolitical risks of owning the world's most sophisticated light bulbs. 1. The business model, a technological monopoly. ASML specializes in photolithography. This is a process that uses light to print microscopic patterns onto silicon wafers. Think of it like a highly advanced slide projector, but instead of projecting a photo onto a screen, it projects a city-sized circuit design onto a fingernail-sized piece of silicon. The product hierarchy. DUV, deep ultraviolet. These are the workhorses of the industry. DUV machines are used to make the mature chips found in cars, refrigerators, and standard computers. While ASML has competitors here, like Nikon and Canon, it still holds the majority of the market. EUV, extreme ultraviolet. This is where ASML's monopoly begins. EUV light has a much shorter wavelength, allowing for patterns so small they are measured in atoms. ASML is the only company in the world that can build these machines. High-NA EUV. As of January 2026, the industry is transitioning to high numerical aperture EUV. These machines, priced at roughly $380 million to $400 million each, are the size of a double-decker bus and are required to manufacture the next generation of 2nm, 2nm, and 1.4 nanometer chips. 2. The 2026 outlook, the High-NA EUV Supercycle. As we move into early 2026, ASML has moved past its transition year of 2024 and is now in a high-growth phase driven by the AI Infrastructure Supercycle. 2026 strategic benchmarks. Intel's 14A node. Intel has become the lead customer for High-NA EUV, completing its final acceptance testing of the Twinscan EXE 5200 systems in late 2025. This sets the stage for mass production of Intel's 14A chips throughout 2026. TSMC's response. While TSMC was initially more cautious about the high cost of High-NA EUV, analysts expect the April 2026 Technology Symposium to be a major catalyst, where TSMC is likely to pull forward its own High-NA EUV adoption to 2028 to stay competitive. Capacity expansion. ASML is currently ramping up its own manufacturing capacity to produce 90 EUV systems and 600 DUV systems annually by the end of 2026. 3. Financial health, fortress margins, and royal payouts. ASML's financials in 2026 reflect its incredible pricing power. Because there is no alternative for its advanced machines, ASML can maintain margins that most hardware companies only dream of. Key financial data, January 2026. Total net sales. For the full year 2025, ASML reported roughly €32.6 billion, a 15% increase over 2024. For 2026, management has provided guidance for double-digit growth, aiming for approximately €36.5 billion. Growth margin currently sits around 52% to 53%. As more high-end EUV machines, which have higher profit per unit, are shipped in the second half of 2026, this is expected to trend toward 54%. The installed base stabilizer. A major part of ASML's value is service and upgrades. Once a machine is sold, ASML makes recurring revenue by maintaining it for 20-plus years. In 2026, this service revenue accounts for nearly €7 billion, providing a cushion if new machine orders ever slow down. Shareholder returns. ASML is a committed dividend payer. In January 2026, the company announced a new multi-billion euro share buyback program and confirmed its policy of a growing dividend, with payments distributed quarterly. 4. Geopolitics, the double-edged sword. The biggest risk to ASML is not technology, it's politics. Because ASML's machines are essential for technological sovereignty, they have become a primary tool in the trade war between the West and China. The China decoupling. Export restrictions. Under pressure from the US, the Dutch government has restricted ASML from selling its most advanced EUV and some high-end DUV machines to China. 2026 forecast. ASML management warned in late 2025 that sales to China will decline significantly in 2026 as the stockpiling seen in previous years ends. Investors are watching to see if demand from US and European fabless foundries can fill this multi-billion euro gap. The talent risk. ASML operates in a highly specialized ecosystem. It relies on thousands of engineers and a complex web of suppliers like SACE for lenses. Any disruption in the Brainport region of the Netherlands or a shortage of specialized physicists could stall their roadmap. 5. The anti-ASML case. What could go wrong? While ASML seems invincible, a prudent investor should watch for these cracks in the armor. Customer concentration. ASML only has a handful of major customers: TSMC, Intel, Samsung. If one of them decides to cut their capital expenditure, CAPEX, for a year, ASML's quarterly results will look disastrous. The physics wall. We are reaching the physical limits of silicon. If the industry moves away from traditional lithography towards something entirely new, like DNA computing or photonics in the distant future, ASML's machines could eventually become obsolete, though this is not expected for at least another decade. Cyclicality. The chip industry goes through boom and bust cycles. While AI is currently in a boom, if there is a global recession in 2026, the demand for cars and laptops could drop, causing chip makers to cancel their orders for new ASML machines. 6. Investment strategy. Is 2026 the right time? The valuation play. ASML rarely looks cheap. It often trades at a high PE ratio, currently around 32 times for 2026 estimates. You aren't buying it for a bargain, you are buying it for quality and certainty. The picks and shovels logic. Instead of trying to guess which AI software will win, you are betting on the company that makes the hammers and nails required to build any AI. Long-term horizon. ASML is best suited for investors with a 5 to 10-year outlook. The cycles of building a new factory, fab, and installing these machines take years to play out. Conclusion. The gatekeeper of the future. ASML in 2026 is a unique asset. It is a monopoly that is actually liked by its customers because it is the only entity that can help them achieve their goals. It is a bridge between the physical world and the digital future. The verdict. While the geopolitical headwinds regarding China are real and will likely cause some volatility in 2026, the fundamental demand for smaller, faster, cheaper chips has never been higher. ASML is the only bridge to that future. If you want to own the foundation of the digital age, ASML is the essential stock.